Hi guys, my name is Ghost Effects and we are ready to the next lesson. So we are in the chart like the XY. I didn't do an analysis of this. USD JPY not trading this today. This trade right here, I closed in the break even. So USD is respecting the extreme zone of our trade. So I expect it to drop to this liquidity and basically respect this tripping formation right here to continue up. So this will be around my trade. I think it will help in the next week. Basically GBPUSD respected this tricky zone, right? This is a tricky zone, respect, and now is looking to respect this extreme zone. So these zones, he only reacted to the downside because he is on a bullish trend. For example, if you are in a bullish trend, let's say we were going down and we left some good zones and price reverted and we are in a bullish trend, price will always react a little bit, go to other zone, react a little bit, go to other zone and continue the movement, right? So let me draw this with the zones and the structure and everything to you guys to understand what's going on here in GBPUSD. So this is a movement that broke structure, right? Okay, good. This is a movement that broke structure, right? Okay, good. So price here basically means a change of structure, a chalk. So within this movement that broke structure and price going up, price left an imbalance here with some kind of internal or external liquidity, and basically price respected this zone, but price respected it, this, let's say it's a tricky zone, for example, or even a order block, like a order block, right, with imbalance, always have imbalance. So price came down, like we're in an uptrend now, we are buying, right? And we need to understand that we need to take buy position. So price will come, take our demand, and then continue up to break the structure, right? So here price will break the structure here. Okay, price broke structure, left some kind of imbalance right here, and leaving this kind of imbalance probably left some order block or demand right here, right? And within this move we are going to go up, but remember price is reacting to something here. So what is it reacting to? It's reacting to, for example, an extreme zone, like, let me call it imbalance, extreme zone right here. So basically within this movement you can buy here, right? You can buy here, right? You can obviously sell as well right here to this other demand. You can sell as well right here to this under demand, seeing how price action is reacting. So basically price moves from imbalance to imbalance, from imbalance to imbalance. So that's the idea, guys. That's the idea. So putting it all together is just using all the knowledge you have and practice it. So for example here, price broke structure from the downside, left the extreme zone, left the tricky zone right here with liquidity. This internal range, now external range liquidity right here, right? External range liquidity and an imbalance in the 15-minute time frame. We have an imbalance right here and imbalance right here. So yeah, basically price then came reversed, created the imbalance we bought, right? This movement came to here, we could sell here, this other imbalance, and buy again to this high. And the moment price comes here and taps this zone right here, comes down, it will probably, high probability, to come to this imbalance right here. See this zone right here, come to this imbalance right here, and then price go up again. So and then price come here, price first will come here, react, and then come here to continue the trend. So it's basically this, guys. It's basically this. There ain't no magic, there ain't no nothing. It's just market moving from zone to zone. Look, for example, here price respected tricky zone, then started to respect extreme zone, and then respected again. And this is how you put it all together, using always liquidity concepts and stuff like that within your trade. For example, I took a trade today in gold. I will show it to you guys with proofs of execution and stuff. The first trade I took in gold was this trade right here. I closed around here because I already made my profit. For example, price came, broke structure for the downside, and left this imbalance. I realized this was an inducement because I noticed that was there is liquidity up here and there is a zone with imbalance on the 50 minute. So this liquidity right here needs to be tweaking, but I wanted to to use this movement just to get at the exactly right spot I want to be in the tournament. So price came, reversed the gear, created an imbalance. See this imbalance? This is this red zone right here is a previous POI, right? For example, price reversed here at exactly this zone and we bought. And when price got to the imbalance, we sold and we make 0.5%. 0.5% you may see as a little bit of money, like it's nothing. You may think like 0.5% is nothing. 0.5% is a lot. If you make a trade and you make 1%, you already make a lot. If you make 0.5%, you already make a lot. So I closed the trade because I know price was going to reverse in the 1 minute time frame. In the 1 minute time frame, you know so price did this and continued. So let me show you guys proofs of execution because I sent it on the Telegram channel. I was trading, like sharing the trades and stuff like that, and I just wanted to get and I want to show you guys, like, I'm in the next payout list. Here's my name, Ghost FX. But why am I in the next payout list? Because basically I trade here from a lot for a very long time. So guys, these are the trades. So first of all, this was the buy gold that I sent it. This buy gold right here. This buy gold right here. This was the trade that I sent it at the time. At the exact time it happened, like, look, it was 12:25 UTC minus 3. So let's go look. This was 12 around 12:25 UTC minus 3, and basically this was the trade 12:26. So I bought it. Gold really went to my take profit. Look at my first take profit, like 3,305. So price really went to my take profit, and I knew this was 305. I knew this was an inducement from the beginning. So this is why I marked my take profit higher, but I closed the trade earlier. First of all, because I needed to gain 3% to remain in the tournament. So if I reverse it during this move, I will basically be out of the tournament. So I want to be in the tournament for the next week, because the next week I want really just to destroy the tournament. I want to destroy the tournament, like make around 60 or 70% risk to reward ratio. So understand something. Oh, sorry guys. Basically, we made this trade around here. So when I got to this point, I just catch the reaction in the 1 minute time frame and sold it right here and made 0.5% right here in this move, like pow pow. A little bit, not too much, just to keep me in the tournament. And look at the proof of the execution. First trade, basically $71. This was the execution on the MT5. Second trade, basically, it was $13. Guys, $13 is a lot of money. $5 is a lot of money. So basically, it's this. I mean, up 9.5%, like negative, because I was basically not focused on the tournament. But next week I will come very strong to it. But yeah, guys, this is basically putting it all together. Just use it as confluence with everything. Like use it everything. Make magic within the charts. For example, where did I take this reaction zone out of? First of all, I perfectly know price here made a chalk, right? So basically we were in an uptrend. Price reacted this zone to the downside just to fill in this gap right here. But basically we are in an uptrend in general because price reacted to this. So I went to the 5 minute time frame, and in the 5 minute time frame I found this. See this zone right here? Price came, created this high, and then broke this high right here. Price basically broke this high, made a break of structure. Within this break of structure, if you see closely, this candle was respected and created this liquidity here. This is external range liquidity. This is internal range liquidity right here. This red line, let me put it in white for you guys to see it well. This white line is internal range liquidity. This basically this second line right here is external range liquidity. So within this idea, I know that price can and will come back to this zone and create a reaction out of it. So let's see which reaction price created. So price came, took the liquidity and respected the external range liquidity zone and created this re-entry point right here, because price in the 1 minute time frame, if you see like this zone right here, just look at the 1 minute time frame. This zone broke structure. Let me delete this. Next lesson will be about session, but we will get to the 1 minute time frame analysis, guys, don't worry. So this zone right here broke structure, right? After breaking structure, basically here was the respected high, so price here changed its structure, right? A chalk, and confirmed this entry right here. And where was the entry? Exactly at the fair value gap, basically on the imbalance. Basically this is a OTE entry, optimal trade entry, on the gold zone of my Fibonacci, guys. So price created this entry. I only entered like from the OTE point to take profit, and then price railed away, but I knew price was going to get to this liquidity right here until this high, because price needs to take this liquidity off before it closes. So guys, this was the lesson, like put it in all together. Peace. Let's